Good evening, and welcome back to another video of Grey Man's Profits for beginners. So you want to be a trader, do you? Okay. Well, as a beginner, you need to discover what kind of trading do you actually want to do. And it's not an easy question. I understand that. Because of course, there's 3 or 4 different types of trading. And while you would want to master them all and find out what you're best at, as a beginner, it's your responsibility to go, okay, I need to learn the basics. I need to master one style of trading, 1 or 2 strategies or patterns, 1 or 2 pairs at most, and then I also need to get comfortable knowing that I'm profitable and know what I'm doing within those areas. If you're an intermediate or an advanced guy, you can work on all 4 different styles if you wanted to. But as a beginner, you need to find out what works for you. Okay, let's begin. So first of all, today we're discussing styles of trading. The options are scalpers, swing traders, day traders or longer term traders, and then you have investors. So what is the difference? First of all, scalpers, often they only operate within trades that last maybe seconds or minutes. So what they often do is they enter and exit very quickly with large margins or large leverage. That way they can see a manipulation in the market in maybe the 1 minute time frame, and they go, okay, I understand that price wants to move in a certain direction, so I'm going to make a heavy bet in that one direction and make a lot of money. Or go in the other direction in which I've lost and hit my stop loss. It's up to you. Swing traders. So swing traders, which I mostly focus on myself, is minutes to hours. So what you do is you analyze the setup and you go, okay, I'm going to enter a trade, and the outcome that I want or that I've predicted through the style of the market might come to pass in the next few minutes or the next few hours, which you watch and you moderate depending on how the market flows. The next one is day traders and long traders. So the only difference between a swing trader and a day trader is they work on a longer time frame. What they're trying to do most of the time is they try and manipulate sessions or even the day's outcome. So they go, okay, I can enter a trade in one point, and the hopes is that over the 4 or 5 hours of a session, whether it be Asia, London, or New York, the price will go in a direction that I would like. But if it doesn't, what they can do is they can wait it out, and they can go, okay, price is most likely going to return in my favor eventually. So they might wait a day, or maybe longer. The difference, and this one's important, very important. The last one is investors. Investors are traders too, but what they do is they focus on the long-term plan. So instead of setting maybe a stop loss, maybe a TP, what they do is they buy, and usually buy in bulk, and they wait. And it can be days, months, or even years to see the outcome that they want. So most of the time, it's a set it, look away, and forget about it for a while. And whether that turns out that the investment was in their favor or not is dependent. So, why is this important? Because the different styles of trading that you go into also indicate how much of your purse or how much money that you have available in your account should be allocated to different resources. And this comes into risk management, which of course is a huge part of the ICT training and also being a trader. Okay, first of all, if you are wishing to scalp, the reason that scalping is frowned upon in some areas is because it is severely risky. Because you're working on such a small time frame, the margin of error is high, extremely high. You're in a market for a few seconds or a few minutes, and if it doesn't go in your direction, there's no time to recover because your leverage is so high that you'll either hit your stop loss and you go, okay, I've lost a little bit of money. You have a larger stop loss where I've lost a lot of money, or more realistically, that it didn't get the return that you wanted. For that reason, they usually only bet about maybe 1% or 2% of their entire purse. Now, what does that look like for an average individual? Of course, if you're a more experienced individual, then you go, okay, I might have a larger amount of money in my trading account. But if you're a beginner, let's say that you're starting off with $100, and you go, okay, I'm going to see if I can get good at this or not. What I would recommend is that from that $100, you make $1 or $2 bets. From there, you can either see the results and get the results that you want because the leverage will be higher, so the return will be higher. But it also gives you an opportunity that you don't lose everything. The same goes for swing traders, what I do. So, for swing traders, because the margin of error is slightly less, and of course the risk is less as well. So that way you've got a larger time frame to, of course, analyze where the market moves, and you can change your trade if you want to. But because of that, they usually do between 3 and 5%. So if you're a swing trader and you're looking for a profitability, most likely you have more money in the account, meaning that you might have $1,000 to maybe $5,000. Based on that, it still works for the 100. Don't worry about it. But if you were going $1,000 or $5,000, 3 to 5% is only looking at what? Between $30 and $50 if you've got 1,000 each trade. And then if it's larger, then you go up. But that remains that, okay, you get the return that you want and it's profitable for you. But at the same time, when you do lose, it's not disadvantageous. That way you're not playing catch up. This isn't gambling. You got to learn the math a little bit. And that's the hardest thing about being a beginner, because everyone wants to be rich quick. And unfortunately, I had to learn the mistake myself. It often doesn't happen like that. It might happen sometimes, but I doubt it's going to be one of us. Okay. For day traders, so they work on larger sessions again. So the risk is about proportional to a swing trader. What they do is they, again, do about 3 to 5%, depending on how bold you are. You can also go up or down, depending on how the market looks. But as, let's say, a mean average, you would go between 3 and 5%. That is the smart thing to do. That way you can learn the skill, and if you're an intermediate or advanced guy, you go, I know what's going to happen, I've read the market, and I'm confident there's no changes coming. Do what you need to do. But for us, it's slightly different. Now, if you become the notorious investor, meaning that you have, most likely you've got money in your pocket, you've got a larger equity that you can work with. For this case, the largest amount that is regularly used for an investor, saying that they have months or years to accumulate this wealth, usually results in about 10% of your purse. Now let's say, if you're a larger player, let's say, number out of thin air, you have 10 Bitcoin to your disposal. 10 Bitcoin is over $1 million. But let's break it down to 10 Bitcoin because it's more easy to comprehend. Then for one idea, for one long-term investment, you would go, I want to put 1 Bitcoin into gold. Gold notoriously appreciates about between 10 and 15% a year, which realistically, if the market continues the way it's been going, means that at the end of a year, you would have 1.1 or 1.15 worth of Bitcoin. The same works for, of course, monetary value. But that's the way it works. And the only reason that they do that, and it's a larger purse, is because the return on the investment isn't worthwhile otherwise. So of course you can take out your investment at any time if it does change trajectory. But to make it worth your while to, of course, put aside large assets into one investment, you have to make it a sturdy purse. About 10-15% if you're bold. Most of the time it's 10, even for billionaires investing. So, with that, I hope that you understand the 4 different types of trading and you're able to at least test the waters in 1 or 2 of them. I recommend swing trading first. Then you can try out scalping. And then if you get good, go into day trading. Investing is when we make some money. Okay. Have a great one, guys. And remember, be the great man. You don't have to be the best. You don't have to be the strongest or smartest. You just have to be the guy that shows up every day. You're going to win. You get shit done. Be the great man.